Before we jump into the analysis, I want to quickly set the stage for what you're about to watch. In the next clip, you're going to hear one of Wall Street's most influential tech analysts, Dan Ives of Wedbush Securities, break down what he believes are the best physical AI investments in the world right now. He talks about timelines, adoption rates, margins, power constraints, and why this moment could be a turning point for artificial intelligence as a real-world economic force. Once the clip finishes, I'll come back and walk you through exactly what was said, why it matters, and what it means for investors looking ahead. Let's watch the video.
Thing that caught a lot of people's attention on the call, I think it did yours as well, FSD. He actually put a timeline, a firm date on that. What do you make of it?
I think that's what he needed to do. I mean, look, this is the most important year, you could argue, ever for Tesla and Musk. Because of FSD, because of autonomous, because of cybercab. And I think it's important to kind of put line in the sand. You know, this speaks to, along with the XAI, you know, in terms of that now investment, you know, a true AI company now forming.
All right, and you've talked about this before, Dan. With FSD, we could see FSD adoption ramp from what 12% now up to 50%. Is that right?
Up to 50%. Yeah, and think about Martin. That's all margins. I mean, the whole point is the reason Tesla stock. You know, I believe we talk about 600 base case, 800 bull case. Is that it's the margin story that's going to start to take hold. Now, look, that's not happening necessarily in deliveries, but when you look at FSD, you look at autonomous, you look at cybercabs, you look at what's truly the software AI piece now coming, that's what investors are focused on. And I think 2025, a huge transition year, 2026, I mean, this is going to be, you know, where I believe is really going to be a golden year.
All right, 439.14 is where we're sitting, up close to 2% after hours. You've been a TSLA bull for quite a while, Dan, and you've got a street high target of, I think, what, 600 after the earnings and after the call. Are you likely to change that view? Could it go even higher?
600 is base case, 800 bull case. I mean, 600 would almost be, you know, I think on the disappointing side relative to what I believe they can achieve when it comes to FSD, autonomous, and robotics. And it just comes down to like physical AI, the two best physical AI plays in the market, Tesla, and the other one, it's the godfather of AI, Jensen, Nvidia. And those to me are the two biggest and the best physical AI plays in the world.
And we're sort of facing the reality of power crunch and somewhat of a chip crunch as well. What do you make of Elon Musk's strategy, custom transformers, custom cooling, on-site generation? Do you think this is the strategy that survives?
Look, I think that you're going to see every big tech player look at Meta, you know, in terms of them doing acquisition. You look what Google's going to do. Each of these big tech companies is going to have to focus vertically on what they can do from a power perspective. Because like you said, look, power is going to be the biggest supply constraint to what I view as the fourth industrial revolution playing out.
So which of the big tech companies, sort of stepping away from Tesla's story alone, which of the tech companies do you think are less positioned for this vertical integration that is definitely needed going forward?
Look, I think the hyperscalers are the ones that are right now laser focused on that. I think when you look, Microsoft, Google, Amazon, they're all going to, I think, aggressively focus on the power angle over the next year. You can talk about CapEx and, you know, there's more data centers under construction today than active data centers. It comes down to the power angle. And that's why, look, there's names like Oklo and others on the nuclear side, which play out. But this is an arms race. And the only thing that's stopping it's not CapEx, it's not technology. The only thing that stops it is the shortages that we see in terms of energy.
All right, now that you've seen that clip, let's unpack what was actually said here, because there's a lot more depth beneath the surface than most people realize. The first thing that really stood out was the emphasis on full self-driving, and the fact that a firm timeline was finally put on the table. That is not something Elon Musk does lightly, and it is not something analysts take casually. When you hear someone like Dan Ives say this is the most important year in Tesla's history, that should immediately get your attention. Not just as a Tesla story, but as a broader AI story. What we're really talking about here is the transition from AI as a promise to AI as a product that generates real margins. That's the key theme running through everything he said. For years, investors have focused on vehicle deliveries, price cuts, and hardware margins. But that is not where the real upside is anymore. The real upside is in software, autonomy, and what he calls physical AI. When he mentions full self-driving adoption potentially going from around 12% to as high as 50%, that is massive. That is not incremental growth. That is a step change. And the reason that matters so much is because software margins are fundamentally different from hardware margins. Once the software is built, every additional user is almost pure profit. That is why he keeps emphasizing that this is a margin story, not just a volume story. This is also why he believes the stock can justify a $600 base case and an $800 bull case. He's not saying that because of more cars being sold. He's saying it because of what happens when autonomy, robotics, and AI-driven software begin to scale simultaneously. That is when Tesla stops being valued like an automaker and starts being valued like a platform. Another critical point he made was about timing. He clearly framed 2025 as a transition year and 2026 as what he described as a golden year. That language matters. Analysts don't throw around phrases like that unless they believe a fundamental shift is taking place. In this case, the shift is from experimentation to execution. Then he takes it a step further and introduces the concept of physical AI, which is where this conversation really levels up. Physical AI is not about chatbots or text generation. It is about AI that interacts with the real world. Autonomous vehicles, robotics, manufacturing systems, and intelligent machines that move, see, and decide in physical environments. And when he names what he believes are the two best physical AI plays in the world, he is very direct. Tesla and Nvidia. That's it. No long list. No hedging. He calls Nvidia the godfather of AI and positions Tesla as the most important real-world AI deployment platform. That framing is incredibly important for investors because it tells you where institutional focus is going. This is not about hype cycles. This is about where capital is flowing and where infrastructure is being built. Then the conversation shifts into what might be the most underappreciated part of the entire AI story right now, which is power. Not computing power in an abstract sense, but literal electricity. Data centers, training models, inference workloads, and autonomous systems all require enormous amounts of energy. This is why the discussion around custom transformers, custom cooling, and on-site power generation is so important. It is not just a technical detail, it is a strategic necessity. The biggest bottleneck to AI scaling is no longer talent or capital, it is energy availability. When he says that power is the biggest supply constraint of what he views as the fourth industrial revolution, that is not an exaggeration. We are already seeing more data centers under construction than active ones in some regions. The demand is there, the technology is there, the money is there. What is missing is enough reliable power to run it all. This is also why he points out that vertical integration is becoming unavoidable. Companies can no longer rely solely on external utilities and suppliers. They need to control their own energy destiny. That means investments in power infrastructure, cooling systems, and potentially even generation capabilities. When he broadens the conversation beyond Tesla and talks about the hyperscalers, the message becomes even clearer. Microsoft, Google, Amazon, and other major tech players are all laser-focused on solving the power problem. This is not optional. It is existential. And notice what he says is not the limiting factor. It is not capital expenditures. It is not technology. The only thing stopping this arms race from accelerating even faster is energy shortages. That should completely reshape how investors think about AI timelines and valuation. This also explains why he describes this moment as an arms race. Everyone sees where this is going. Everyone understands the stakes. The winners will be the companies that can scale AI in the real world without being constrained by infrastructure limitations. When you connect all of these points together, a very clear picture emerges. We are moving from AI as a concept to AI as an industrial force, from software demos to physical deployment, from promise to profit. That is why this conversation matters so much. It is not just about one company or one stock. It is about understanding where the next wave of value creation is coming from and what constraints will shape it. For investors, this means thinking differently. It means focusing on margins, infrastructure, and scalability. It means recognizing that the biggest winners will be those who can integrate software, hardware, and energy into a cohesive system. This is also why the idea of physical AI deserves far more attention than it currently gets. It is where artificial intelligence stops being virtual and starts transforming the real economy. And this is exactly the kind of insight that separates short-term speculation from long-term conviction. When we look at the companies Dan Ives called the best in the world for physical AI, there are two names that stand out: Tesla and Nvidia. Let's start with Tesla, ticker symbol TSLA. Tesla is more than just a car company today. According to Ives, the real story isn't deliveries or traditional automotive volume. The key driver is full self-driving, or FSD, and the broader AI-enabled software ecosystem. Right now, adoption of FSD is around 12%, but Ives projects that could climb as high as 50%. That is not incremental growth. That is a massive leap. Why does that matter? Because every additional FSD user contributes almost pure margin. Once the software is built, scaling it costs very little, which fundamentally transforms Tesla's economics. This margin story is exactly why Ives is so bullish, even setting a $600 base case and an $800 bull case. He's clear. The stock's upside comes from autonomy, robotics, and AI-driven software scaling, not just selling cars. In other words, Tesla is evolving from an automaker into a real-world AI platform. 2025 is projected as a transition year, and 2026 could be a golden year where these technologies start to drive meaningful profits. Tesla's position in physical AI is about execution. They are already deploying systems that move, see, and make decisions in the real world, which gives them a first-mover advantage that is hard to replicate. Then there's Nvidia, ticker symbol NVDA. Ives refers to Nvidia as the godfather of AI, and for good reason. Nvidia dominates the AI hardware market with its GPUs, which power everything from data centers to autonomous systems. While Tesla focuses on applying AI in the real world, Nvidia provides the computing backbone that makes these physical AI applications possible. They have a clear moat in both hardware performance and software optimization, which gives them the ability to capitalize on the AI boom across multiple industries. For investors, Nvidia represents exposure to the raw computing power and AI infrastructure that is essential for the next wave of growth. Together, Tesla and Nvidia represent two sides of the same AI coin. Tesla is deploying physical AI in real-world environments, turning software into real margins. Nvidia is building the underlying computing architecture that enables these AI systems to exist and scale. Ives also stresses the importance of power and energy. Both companies are positioned to manage these constraints, Tesla with custom transformers, cooling, and on-site generation, and Nvidia with its leading-edge chips optimized for efficiency. Investors watching these names are not just buying into hype. They are buying into companies that are executing in real time, addressing scalability, energy, and infrastructure, while capturing margins that can transform profitability. In a market where AI is moving from concept to industrial execution, Tesla and Nvidia are positioned as the clear leaders, and the transcript makes it obvious that Ives sees them as the two best physical AI plays in the world right now. If you enjoyed the video, share your thoughts in the comments and subscribe to the YouTube channel so you don't miss out on the next important analysis update. Thanks for watching, and I'll see you in the next one.